Okay, CRT. Okay, now 15 minutes time frame. Now I'm not going to be teaching CRT. Okay, CRT. I'm not going to be teaching that because you guys do not need CRT. I'm not going to teach what I most of the time. Okay, not that I don't use CRT, but there are much efficient ways you guys can make use of TS. Okay, now what is TS? Total soup. Do I like the name turtle soup? No, but yeah, I just call it TS. Okay. Now, what is a TS? You need to understand what a break of structure is. Okay. You need to understand what a break of structure is. Here is a break of structure. I explained that. If you don't understand, go back to um the break of structure video and try to understand what I mean. Now, to understand CRT and TS, you need to have. I'm gonna draw this. You guys are gonna need it after. I'm gonna draw this. Okay. Now, first break of structure, and I want you guys to take note of something. Um, when it comes to break of structures, I want you to keep this in mind. Do not look for break of structures in the range. Where is the range? Okay, here is the range. Here, wait a minute. Here is the range. Here, do not look for break of structures here. Don't. Here is where you should look for break of structures. Here. Don't. I want you guys to have an idea of what I'm talking about. Um, Here is where you look for break of structures, not the range. Okay, you do not look for break of structures during the range. Where exactly do you look for break of structures? After liquidities has been swept. Okay, look for break of structures after liquidities have been swept. Where are liquidities? Now take a look at this. London session strips out Tokyo's low. What happens? Gives us this break of structure, and that's our trade. We're going to the upside. Now, if you had taken this trade, which trade? For example, you took this trade, this break of structure, to the downside here, you would have lost your money. No liquidity, no nothing. This there's nothing you guys are looking for in the range of the market. You shouldn't look for nothing in the range of the market. Okay? All you need is liquidity pools. Like, you need to understand where they are. Then once they get swept. Okay, here we go. What this is the previous high. Okay, there you go. Now you get this break of structure to the downside, then you can take the trade. Do you understand? So that is why we don't take trades every single day, because once we do not get that setup or liquidity sweep, we do not take that trade. We do not. Okay. Now for TS. Now once you understand what liquidity means, I want you guys to be able to understand what a TS means, or a fake break of structure. I mean, yeah, a TS is a fake break of structure. Okay. Now, what is a fake break of structure? This is a fake break of structure. This here, this candle here is a fake break of structure. A period in time, it looked like this. A period in time, it looked like this. There you go. Can you see it? It looked like that, which is a fake break of structure to the downside. But what did he do? it swept a liquidity. It swept this liquidity. Now, listen carefully. One, a fake break of structure. Two, tapping into a confluence. Now, it might be liquidity sweep. It might be liquidity sweep. It might be break of structure. It might be fair value gaps. It might be whatever. But a valid TS fills the break structure and taps into a confluence. Now, and what do we get? We get this short. There you go. We get this. It sweeps this. Now, what do you guys see? Listen to me carefully. What do you see? Okay, sweeps this too. What does it do? Okay, you see it sweeps all liquidity here. Okay, gives us a break of structure. Man, what do you see here? I'm gonna put this here. Now, watch carefully, guys. 1, 2. I want you to watch carefully. Take a look. It went to the upside, then went to the downside and broke structure. Do not forget we're on the 50 minutes time frame, okay? Now, short position here. I cannot remember what price is gonna do right now, okay? And I do not wish to restart this video, okay? I hope this is a winning trade, and I'm not going to restart it, but I would just want you guys to understand. I'm literally taking this trade like real life now. At this point, I'm taking this trade in real life, okay? Now let's see what is going to happen. There you go. We want the trade, and what did I target? I took this trade because take a look. What time is it? London session. Doing what? Sweeping out Tokyo's previous low. And what do you see again? What do you see again? A fake break of structure. Where is the fake break of structure? No, we do not get one though. Let's go to the 5 minute. We still do not get one. But what do we get? Listen carefully, guys. What do we get? We get this. Now, I'm gonna be explaining what a playbook is in the next. Let's just explain it here. A playbook is different strategies. Okay, different strategies. Okay, now, what strategy is this? Okay, let me. Now, what is a playbook? A playbook is trading, like having different strategies and the exact steps to like. Now, for example, this is daily time frame. Okay, this strategy works with previous daily low being swept or previous daily high being swept. Do you understand? Now that is the strategy. This strategy is intersessions liquidity. Okay, what are intersessions liquidity? Uh, this trade. Now I see this get swept, no TS, but what time is it? Time and price. Do not forget about that. What time is this? It is London session. Comes down, sweep Tokyo's low, gives us a break of structure. What do? We take that position. Let me just say I get it here. What should I target? I might just go for here, like a 1 to 2 something. I don't know. honestly, I would still try to go to the upside, because I can see we're going to the upside here. We are going to the upside, and I can see this. What is price doing? It taps into this order block here, so I should still expect price to sweep out this liquidity. Probably tap into this order block. Yeah, let's just go for 1 to 3. Now let's see what price does here. I don't know if we're gonna. Now, there you go. We won the trade. Okay. Now, daily, a daily sweep, intercessions, TS. This is not TS, but this trade we took right here is what? TS goes to the downside. Do you understand? A TS is a fake break of structure. Now, what time frame do we look for TS? We should look for them particularly from the 30 minutes time frame. Just try to like look for what? Look for try to look for this liquidities. Okay, try to always look for liquidities. Once you get liquidities, exactly just like this one here, a liquidity being swept, and what happens? Goes to the upside, and here is a fake break of structure. This is JPY. Let's just go to like AUD USD. Yeah, this is more clear price action. What do we have here? A sweep here, filling what? This fair value gap here. Do you understand what I'm saying? That is what I call a TS, and you guys need a TS. Now, TS is going to explain a lot to you. Like, it explains a lot. You understand you're going to the downside. You are going to the downside. Now you should look for TS. TS, every TS tells us. Take a look here, guys. Just it tells us it is time for what? For a reversal. Now what do we get here? A sweep. What do we get? Now it tells us that it is time for a reversal. Now we get the sweep. Normally, what do we have here? A fair value gap. And what is this? A fake break of structure. Sweeps this, taps into the fair value gap, and goes to the downside. Gives us this break of structure. This tells us what? It tells us we are going to the downside. Everything else tells us we're going to the downside. Now, this is not a liquidity sweep. This is not a liquidity sweep. So this TS, I might take it or not, but if I understand we're going to the downside, why not? Why won't I take it? Now this is the 30 minutes time frame, by the way. Here is a TS, sweeps this, goes to the downside, and this is also a TS, sweeps all this, goes to the downside. Do you understand? Here is a TS, fake break of structure. Here goes to the upside. Like, I want you guys to always the upside. Here, what do we have here? A TS goes to the upside. Go back to the 1 hour time frame. Now, what time frames? From the from 30 minutes time frame. It's like the daily time frame. Do you understand? Here is a TS. What is price doing? Price sweeps everybody and goes to the upside. Fake break of structure. Okay, and what do we have here? CS. What do we have here? TS. You see, I'm not focusing on TSs in the range of the market. No, I'm not. I'm focusing more on TSs at liquidity zones. That is why the win rate is that explosive. Do you understand? Once you are able to understand it, you cannot unsee it. Okay? You cannot unsee it. Try to look for liquidity pools, or now let's come back here. Let's come back here. I created this. Now, for TS to work, you need two confluences: a fake break of structure, and another confluence to make it work. Now, a fake break of structure tapping into another confluence, or vice versa, a fake break of structure tapping into another confluence. Now, how do they look like? Fake break of structures. Here we go. They Fake break of structures eventually will sweep liquidities because they are fake break of structures. Okay, give me a minute. So, fake break of structures. Can you say fake goes up to the upside? Fake break of structures. They sweep liquidities already. Okay, so one fake break of structures. Where is it? Where is it? One fake break of structure. Two, the confluence, and there you go. If you understand intercessions, you understand daily, you understand um the weekly liquidities, you understand the trend, you understand that you just need to look for the previous low and previous highs, and once you get a TS in addition to that, that should be your legendary A plus setup, especially if it is on the higher time frame. Do you understand where I'm going? So I want you guys to be able to walk like that. Try to understand exactly what I'm trying to say. So there you go for CRT and TS. No, not CRT then. TS. But if you are curious, CRT is just a it's called candle range theory, and it is mostly used for taking profits. For example, here we go. This is a fake break of structure. This automatically becomes CRT. I'm not going to be going in depth into CRT because I'm not trying to like give a lot of information at once. Okay. Now, here is CRT and CRT low, CRT high. This is the higher time frame. This is the daily time frame. So try to understand. This is a lot of pips. Okay. Now, 50 percentage. Where's Scanbox? 50 percentage. This is your TP1. Here is your TP1. Here is your entry. What like this is how CRT works. Um, Once you get a fake break of structure and you see price on lower time frame going to the upside and all, you understand. Okay, you get a break of structure on the lower time frame. It doesn't show a lot of information on the daily time frame, but like on the 15 minutes time frame, you get a break of structure around here. Once price get here, you buy and you understand that price is going to like explode to the upside. Do you understand? So that is what CRT is essentially. Do you understand? So yeah, that's about CRT. And we're gonna go live on calls. You guys are gonna ask me questions if you're having problems somewhere, or you can like post it in the group and anybody that knows the answer to it might just reply you, and if no one does, I'm gonna be there too. Okay, so yeah, peace out.